Our thesis is that if you look at the performance of contemporary art, and contemporary art is narrowly defined as art created after World War II, so that of the past 75 years, that segment of the art market has appreciated 14% a year from 1995 through present, right? So from an appreciation rate perspective, it's really interesting. From a diversification perspective, it's even more interesting because art prices do not necessarily trend in the same direction as public equities. So if you have 60% of your investment portfolio allocated to stocks, and if you're like me, you're concerned that the public equity valuations are overheated, then if public equities fall, art prices may not fall. And I think that's the most interesting thing about the characteristics of the asset class today. It's a global asset class. You can buy a painting in New York, you can put it on a plane, you can sell it in Hong Kong. The US is only 25% of the art market, so your concentration on any specific country is somewhat limited. We just think it's a really interesting asset class that acts as a diversifier, just like you would think about real estate, or some people think about gold, or some people in today's world think about crypto. We just think it should be part of an investment portfolio.
So I guess how would you compare art to gold then?
Well, it's a good question. It's not, our research team is better at answering these specific comparisons than I am. I mean, I think when we think about gold is more correlated to public equities than art is. But interestingly, art does have, out of any asset class we track, art has the highest correlation to gold. And that correlation factor is roughly 0.2, meaning that 20% of the time, art prices kind of move in the same direction as gold prices. So it's still really not that correlated. But I think people invest in gold when they're concerned about inflation. I think people are concerned about inflation today. I think art is a real asset. So arguably, it could be a good hedge against inflation. We actually don't have any data that shows that for full disclosure, but theoretically it could be. Yeah, so I think in some ways it's similar. I mean, I think a lot of people think of real estate, gold, and art similarly is within the alternatives bucket.
So what drives up the prices for art? Is it public opinion, or is it the auction prices? I mean, what drives that?
Excellent question. It's an excellent question. So we think there are two primary drivers of art prices, and one is worth explaining, and it goes back to my comment about 64% of the art market being related to 100 artists, most of which are no longer living. So if you think about, and if you go back to school and you think about basic supply and demand dynamics, right? You have this really interesting thing in the art market where when artists establish a certain amount of cultural significance, it's usually later in life. And, there's so many artists that we could use as examples of this. Jackson Pollock is one that I know well, and I've tracked over time personally. And so I like talking about him, but he's, this splatter drip painter in mid-century America. So Pollock, when he was living, was obviously painting many of these paintings. And then, he was on the cover of Time magazine in the late 1940s. And then he died, I think a couple of years later, if I recall correctly. All of these paintings when he was living were either in his studio or owned by collectors. And he passes away, and those collectors that own those paintings start donating them to museums who never sell paintings. So over time, what's happened is that his cultural significance has grown well beyond his death, but the number of paintings that collectors can actually buy have shrunk to about 21 or 22 paintings today. And out of those 21 or 22 paintings that are left in private collections, there's only, I think, one or two that would be considered an A example. The majority of them are B or C examples, but the B or C examples sell for $35 million because if you want a Pollock, that's all that's left.
Right.
So it's an interesting asset class in that you have shrinking supply as cultural significance grows. And that's different than most asset classes. Every single day, there's more gold that's mined. Every single day, there's more homes that are built. Definitely every single day, there's more companies that are started. So you have a unique supply demand dynamic in the art market that we think drives prices. The second thing, for better or for worse, is that art prices are correlated to the top 1% on a global basis. So the wealthier the top 1% on a global basis gets, we think the more art prices go up. That is what it is, for better or for worse. So if you believe in that trend, then you probably believe in art prices going up.
Oh, that's an interesting take and an interesting. I like that idea. So, I mean, it goes back to basic economics, which is something I guess you wouldn't necessarily think about with art. So, is it really true you have to become famous in art? You have to die? Is that really?
Yeah, it's not. Everyone always gets that. I think specifically wrong. There's nothing significant about an artist dying, and honestly, in today's world, we have more living artists than ever. Right, the ability to be successful while living today is far greater than it was many years ago. But that the moment of death just simply means that supply at that point will start shrinking
Stops, yeah.
into the future.